congrats to everyone that took a position on HUD 8. It was in dollar terms my biggest win ever, with some options ending up 10 to 15 baggers. Needless to say, I've been following this space pretty closely for a while now. Many data center stocks have run up dramatically this year, with the exception of one. And that's precisely what I wanted to talk about in this video. But talk is cheap. I'm backing this up with over half of my net worth in this name. I'm also leveraged via options and margin. Hopefully my conviction makes a little bit more sense by the end. A quote from someone that I really admire is to put all your eggs in one basket and to watch it carefully. For context, this market is playing with other shiny data center toys right now and largely ignoring this name, which is so stupid considering they're the OG company to pivot from mining, and very much, in my opinion, S tier among all the miners in this space when it comes to infrastructure, assets, and expertise. The reason it has underperformed is related to the biggest event in this company's history, which coincidentally is happening this week. This is very important. I will speak on this later in more detail. As a result, I believe this mispricing presents a rare asymmetric opportunity, like multi-bagger in a couple weeks is very much in the cards. No exaggeration, while the downside on the commons is realistically very, very limited. Do you know how Hisoka feels when he sees gone? Well, I feel the same way finding setups like these. I think this one is going to be a banger, so sit back, relax, and let me cook. Obvious disclaimer, don't do what I'm doing, do your own DD. This is not financial advice. Before I dig too deep into the company, I think it's important to level set and speak to the industry as a whole. And boy, is it an exciting industry right now. The data center space has quickly become one of the hottest themes across the market. Beyond just numbers go up, it actually has profound implications to the economy as a whole. In fact, research recently revealed that GDP would have been flat if not for the AI data center boom. This is further fueled by big tech earnings calls, where they all pretty much emphasized continued and increased capex spend on data centers. Like, just take a moment and think about this. This is much more different than a meme sector pump and dump. This sector has literally the two most powerful entities in the world supporting it, big tech and government. Don't take my word for it though. This administration has been very open when it comes to their focus on accelerating AI, whether it's Project Stargate with an estimated spend of hundreds of billions of dollars, or the very recent news that came out about accelerating power for these data centers. These are just two examples out of the countless headlines. You'll just have to take my word for it. In summary, this space right now is red hot, with support from the administration and big tech. Like, imagine fading these two entities. Speaking of big tech, their earnings are coincidentally this week as well. I think the chances are very high they remain consistent with their past messaging on capex spend, and that they will spend. Let's just hope this is the case. Otherwise, your boy is absolutely cooked. Speaking of cooking, let's get to it, shall we? The company that I am degenning on is Corz Scientific. They used to be the largest Bitcoin miner in North America and were one of the first to pivot to focus on high-performance computing. It's really one of those moments where the company was at the right place at the right time. Given these miners had facilities and contracted power locked in, originally meant for Bitcoin mining, during a period where demand for energy and infrastructure was significantly lower, they now pretty much hold all the cards and leverage when it comes to securing those big, juicy AI data center deals. In fact, earlier this year, Corz Scientific inked a deal worth over $10 billion with Coreweave. I think this is really the first big deal that kickstarted this entire boom in the sector. It's significant because out of all the miners that Coreweave could have picked to expand their capacity with, they locked in a long-term giga deal with none other than Corz Scientific. Look, I don't pretend to be an expert in this area despite the hundreds of hours I've spent on it, and quite frankly, I don't need to be in this case because the actions speak volumes. Coreweave obviously had a lot of confidence in Corz Scientific to make such a large commitment. If the experts at Coreweave said Yuguchi after their due diligence, I mean, who am I to argue? Next, let's talk about valuation. I think it's pretty ridiculous. Just look at this. This is a comparison of the performance of Corz Scientific versus its peers. The 4 other companies were picked because I felt they most closely resembled Core Scientific, given that these are similar in size and scale. Now, you probably think I'm cherry picking, but I promise you, I am not. Still think I'm capping? Okay, fine. Here you go. This picture is all I need to communicate why I think Core Scientific is significantly undervalued. But that's not enough for me. We gotta go deeper. I mean, surely Core Scientific has underperformed because they are F tier in execution compared to the other names, right? I think a good comparison to Core Scientific is TerraWulf, who also inked a contract recently with Big Tech. So let's have a look at the terms of each. Core Scientific's deal is $10 billion over 12 years, while TerraWulf is $6.7 billion for 10 years. Okay, now let's have a look at how each stock has performed. TerraWulf is up 150% since securing their contract with Google and FluidStack in August, and up 400% since the April lows. Meanwhile, Core Scientific is just over 150% since the April lows. Taking a look at their contracted power and commitments, I think it's pretty silly they are trading at the same market cap. Either TerraWulf and the other names in this space are overvalued, or Coreweave is severely undervalued, and I'm betting it's the latter. You're probably asking, why the severe undervaluation? Well, it's because Core Scientific is tethered to Coreweave, given that the buyout terms is based on the floating price of Coreweave. Because Coreweave has been flat for most of this year, it has severely dragged down Core Scientific with it. As someone that's followed the sector pretty closely, I firmly believe that Core Scientific should be at minimum 30 to 50% higher than its current valuation to be closer in line with peers. In summary, Core Scientific is trading like a D-tier data center company when I believe they are S-tier, among the very best in the sector. Moreover, another observation I made is the low activity related to this ticker across all of the online forums, whether it be Reddit, X, StockTwits, and Yahoo Finance. This is pretty good alpha for me because it proves the general lack of retail interest in this ticker, which I love. For reference, Iren gets about 20 times the discussion versus Core Scientific. Admittedly, it's more of an art than science, but regardless, it proves the fact that Core Scientific is underappreciated and is currently lost in all of the noise of the other hyped up names in the sector. Therefore, it's still not on the radar of many, and the keyword being yet. This presents an awesome opportunity for us. Speaking of opportunity, the biggest event in this company's history is happening this week, and I'm pretty surprised, to be honest, at how little it's been discussed. Fortunately, I got you. In short, the shareholder merger vote with Coreweave is happening on October 30th. Mark your calendars, ladies and gentlemen, because this stock could violently re-rate if rejected, and this catalyst will set everything off and kickstart the fireworks. In this case, the result will be binary, much like biotech readouts. Either shareholders approve and the merger goes through, or it's rejected and Core Scientific continues to operate as a standalone company. But unlike biotechs, the IV isn't even spiked right now on Core Scientific going into this vote, which is very, very surprising to me as I think it's mispriced. Furthermore, a quote-unquote bad outcome in this case will have very limited downside at current valuations. So let's break it down. Personally, this is my favorite part, so sit back, relax, and let me cook. Let's talk about the bear case first. The negative outcome from my perspective is if the merger is approved by shareholders. Once this occurs, the slight premium that the stock is currently trading for right now will quickly close. As of today, Corz is trading at a 15% premium to the buyout terms. Therefore, all things remaining equal, it should trade down just under that, factoring in other risks of the deal not going through, such as regulatory and other considerations. But luckily for us, it's not that simple. We have to dig a level deeper. I believe Coreweave is presently trading at a discount because the market is expecting a decent likelihood of the merger being rejected by Core Scientific shareholders. So once this merger is approved, I expect Coreweave to pump a decent amount as the market is able to price in the merger being finalized and the synergistic benefits of the combined entity, as well as the cost savings to Coreweave from no longer needing to pay out the $10 billion in contractual obligation to Core Scientific. Therefore, let's play out a hypothetical scenario where the merger is approved and Coreweave subsequently pumps 15% on this news. which I don't think is out of line considering many names in the sector pumped way more than that in a day on absolutely no news very recently on October 24th, like Hut 8 and Iren. If this ends up happening, then the core scientific commons are essentially flat, as the 15% premium that they currently have is offset by Coreweave pumping 15%. This number can, of course, fluctuate higher or lower, but generally I think the ballpark is pretty fair, meaning there's really no downside on a bad outcome. Let me stress this and repeat this again, because I think this is as close to a glitch in the matrix as you can find. Bad outcome equals no downside. Like imagine investing in a biotech where they only had one drug and the readout came back negative and the stock stayed flat. Like, what? Now, let's talk about the bull case of holding Core Scientific going into this vote. And that is the scenario where the merger is rejected by the Core Scientific shareholders. As soon as it's rejected, the stock will instantly be untethered from Coreweave, meaning its price will be set by the free market once again. In theory, this means that this outcome will result in a much higher degree of variance and volatility when it comes to the stock price movement, as it could theoretically go up over 100% or drop 50%, since there's no longer that Coreweave safety net to prevent it from drilling and also conversely tether it from running. As for me, based on my relatively in-depth research into this company and the sector, I think the probability is pretty high that Core Scientific will re-rate significantly higher. Either that or its peers need to come down significantly lower, which in this environment I see as unlikely, at least in the near term, with all the hype the sector is capturing, as well as the big data center deals coming out seemingly weekly, along with the current administration's support. Now, let's get to the meat of it. What is the likelihood of the merger getting rejected? There's two key reasons that lead me to believe there is a very high likelihood of this vote getting rejected. First, several large shareholders have already come out publicly stating their intent to reject this merger. Notable ones include Vanek as well as 2C's Capital, the latter of which released a detailed deck outlining their rationale, which I would strongly urge everyone to review as part of your DD. I've personally spent hours on this deck and verified and dug into many topics discussed. It's actually an excellent learning tool for anyone invested in the sector as a whole. In terms of my thoughts on the 2C's deck, I think they did an amazing job outlining the rationale for why Core Scientific is discounted at the current share price. They use competitor multiples and discounted cash flow projections to argue their case, which I don't think is wildly out of line and pretty reasonable, all things considered. All that detailed nuanced research is great and all. They say a picture is worth 1,000 words, and this picture of Core Scientific versus its peers just proves 2C's argument. Another important point raised by 2C's is the lack of due diligence from Corz management when it came to assessing alternatives at the time Corz agreed to the merger. This is further fueled by equity incentives totaling close to $200 million, potentially further incentivizing management to sell out to Coreweave at the expense of shareholders, creating a potential conflict of interest. Second, ISS and Glass Lewis both recently came out only a few days ago recommending that shareholders vote against the merger. If you're wondering who they are and why these names matter, well, I got you. But first, we need to zoom out and look at the Cor's existing shareholders, the largest of which are none other than Vanguard and BlackRock. While they typically have in-house experts advising them on votes like this one, they also rely on the opinions of ISS and Glass Lewis, who are the two leading proxy advisory firms. Think of them as consultants that does the research and then goes to the company management and tells them their opinion. My initial thought was, well, they probably don't have that much sway on these index funds like BlackRock's, but digging into it more, they are actually surprisingly pretty influential. So much so that Musk even commented on this exact topic just a few days ago. Talk about epic timing. All that's to say, the largest shareholders of Core Scientific are actively being advised to vote against this merger. A key part of my investing strategy is to consider whether certain information I'm trading on is already priced in. In the context of Core Scientific, I see several green flags and tailwinds that make me massively bullish that this event and the potential of this stock is in fact not being priced in. First, as I have alluded to earlier, is the barren discussion of this ticker on popular forums. I've tracked these pretty diligently for a while now, and for every time Corz Scientific comes up, there's about 30 posts on Iren and Nebius. Corz Scientific is like a genius middle child of really shitty parents, ignored and forgotten, which is a shame because they are easily on my list as S tier in the space overall. I would rank them up there with Coreweave, Iren, and Nebius, just for an example of how mistreated and forgotten it is. Look at this post. I mean, no hate on the poster. It's just interesting to me that it got 250,000 eyeballs on it while totally missing Corz Scientific, who, by the way, in my opinion, is better and cheaper than 95% of names on that list. And I'm not even saying this because of my heavy bags in Corz Scientific. I'm just spitting facts. Next, let's talk options. The options activity on Corz Scientific in terms of open interest is very, very thin. Furthermore, IV is stupidly mispriced in my opinion, like it's actually regarded. The IV is way too low, trading at 100s and high 90s. For context, Corz Scientific IV is trading at par or below its AI Bitcoin mining peers. Like, hello? Either I'm regarded or this market is super, super regarded. It's not like they have an event coming up that can move the stock massively. And you're telling me the IV isn't even elevated? What the actual fuck? Efficient market hypothesis, my ass. That about covers it. In summary, Corz Scientific is S tier trading like a D tier in the data center space. They're currently very discounted and under the radar compared to peers. And with the upcoming vote, I believe there's a high likelihood of shareholders rejecting the merger. This divorce will in turn untether Corz Scientific, and I believe will lead to a massive re-rating by Wall Street, resulting in significant upside. If I miss anything, please let me know in the comments. I'm sorry I wasn't able to get out this video sooner. If it seems like this video was rushed, well, it kinda was. Life can get pretty busy and making videos is actually pretty time consuming. If you want my thoughts in real time, please feel free to give me a follow on X. I'm honestly pretty proud I shared my thoughts on Corz Scientific in real time and noted the options chains being severely mispriced before the recent massive bullish options flow confirmed this. Cheers.